Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Rupee, Lata Venkatesh has a special guest with her for commentary on the rupee and outlook on the economy. Let's cut across live.
This week has been a little trying for the global financial markets, and it's had its impact on India as well. The currency, which was reasonably steady at around the 69 mark, has hit 70 and now 70.3, 70.4. So clearly there is a flutter in financial markets. To speak to us about the trade deficit, about the current account deficit problems that may emerge, I have with me the advisor to the Finance Ministry, Sanjeev Sanyal. Thank you very much, Sanjeev, for joining us.
It's a pleasure.
Well, Sanjeev, for me, it's not markets and their ups and downs that worry, but the trade deficit number. The July trade deficit is 18 billion. If you take April, July, and that is 62 billion, and extrapolate, multiply it by 3, it comes to a trade deficit number which can bring current account deficit to 3%. Is that a worry?
We watch these numbers obviously very closely, and we are always concerned about the trends in it. But as things stand, there's nothing particular to be concerned about, and we need to be careful about extrapolating a couple of months' data either which way. So just like we don't celebrate a couple of months of good data, we will not celebrate a couple of months if the trade deficit widens a bit.
No, but the trade deficit has widened at a time when crude was not at its highest. Crude had receded considerably from...
well, it's still at very elevated levels, as you know. So it is something we watch carefully. So it is not... Remember this, it has come down... the numbers you are getting is not related to the recent come down. So
it was the July...
Yes,
it's
so
the July number. But even in July, it was not 80. It was more at 74.
Yes, but the contract for that would have been done earlier.
Okay. So... are you saying that it can come down on its own? Because Indonesia has actually started some administrative controls on imports.
No, so we will watch this, but we are not into doing administrative controls, as you know. And anyway, as I said, extrapolating 2 months of data in either direction is not a particularly good idea.
No, not because of extrapolation, but since there is no one-off, since everything is growing...
As I said, let me reiterate that extrapolating 2 months of data in either direction is not very helpful.
Okay, but is not current account deficit a worry?
No, we watch it very carefully. Of course we watch. We're always a worry. Even the good times we worry about it.
Okay, no, is that linked to why...
So, okay, I think I made my point clear. We can move on to another question.
No, is that the reason why the rupee was allowed to depreciate?
No, the rupee is managed, at least for the last 3 decades, using exactly the same formula and framework which the Reserve Bank has been using, which is the following, that the rupee is allowed to find its own level in the long to medium term. The Reserve Bank, however, has a long-held policy of controlling volatility, which it has more than adequate foreign exchange reserves to do in either direction. So just a few months ago, it was appreciating very strongly, and it was accumulating foreign exchange reserves. And now that it is has been weakening, it has been controlling the volatility on the other side by using the reserve. That's what the reserve are there for, and they are, doing exactly what they've done for now decades. It's a well-established policy. Now, as far as the economics of it is, remember, I'm sure you've heard something called the impossible trinity.
Yes.
If you have a relatively open current account, then you have to opt for either the monetary policy or the exchange rate in the long to medium term. Now, because we have now an explicit monetary policy committee-based system, clearly we have opted for monetary policy. So now, other than obviously extreme situations where we may use capital controls, we normally don't, and allowing for some use of foreign exchange to temper volatility, we will now allow in this format explicitly allow the rupee to find its own level. Again, whether it's the economics or long-held practice, we are basically doing what is the appropriate thing to do.
Okay. No, is the government's view or your view that a correction in the exchange rate is enough to bring the deficit and the current account deficit under
control? As I said, the rupee will find a level. Now, one important thing that is always forgotten in all this is that when you're thinking about competitors, I think is what you're hinting at, we have to think about not just the bilateral exchange rate vis-a-vis the dollar. The rupee has been weakening against the dollar, but in the last 5 years, it has been very, very solidly stable. In fact, has appreciated, in fact, against virtually every other major exchange rate. So whether it's the euro or the pound sterling or the yen, or in fact even the Chinese yuan, against whom obviously we should, from a competitiveness perspective, keep a watch. Against all these currencies, we have been broadly stable. So the point is that what is really happening is, given various external factors, including the Turkey situation, the dollar is strengthening.
Yes.
I think the better way to think about it is the dollar is strengthening. The rest of us are weakening consequently, because by definition everybody else weakens. Our exchange rate with pretty much everybody else is stable. So I don't think there's any reason to jump to any conclusion, panic, or any other thing. And I think, in fact, I would be far more concerned if the central bank suddenly opt for a new and untried policy. It is doing exactly what it has done for a long, long time, allowed the long-term adjustment, managed the volatility, and of course, in the very long term, we also look at the real effective exchange rate, which is based on a basket of currencies against whom, as I said, we are very, very stable.
Okay, Sanjeev Sanyal, very clear that the recent fall in the rupee is not something to worry about, and rupee will settle at a certain level. We will have to take a short break. On the other side, the condition worsens in Kerala due to
is, given various external factors, including the Turkey situation, the dollar is strengthening.
Yes.
I think the better way to think about it is the dollar is strengthening. The rest of us are weakening consequently, because by definition everybody else weakens. Our exchange rate with pretty much everybody else is stable. So I don't think there's any reason to jump to any conclusion, panic, or any other thing. And I think, in fact, I would be far more concerned if the central bank suddenly opt for a new and untried policy. It is doing exactly what it has done for a long, long time, allowed the long-term adjustment, managed the volatility, and of course, in the very long term, we also look at the real effective exchange rate, which is based on a basket of currencies against whom, as I said, we are very, very stable.